Welcome, everybody, to the Scale Up Show. This is your host, Ryan Staley, and I have a very special guest with me today. I have Kyle York. Kyle is the CEO of York IE, which is a really cool concept of a company. It's a combination of advisory as a service and a venture capital company. Have over 200 employees now. Also have a platform with a global operating team, data automation, and tech. And there's a lot we're going to dig into today. Kyle, welcome. Happy to have you on the show, man.
Thank you for having me, Ryan.
Yeah, dude, I love your background too, where you grew a company from 0 to 100 and then exited to Oracle, which we didn't even talk about this, but my friend works over there right now too. So he's drinking the Oracle Kool-Aid, if you will. So why don't we do this? I'd love to hear just like what stage of the journey your company is in, because it's really unique structured, right? I don't think I've had anybody that is structured the way that you are organizationally. So where you guys are at in the revenue journey, and then we'd love to hear a little bit about the details of your go-to-market.
Yeah, great. Thank you for having me. Like I said, really excited to be here and talk at scale up. I kind of feel like we're in the scale up stage. We've scaled up the firm, we've bootstrapped it, self-funded it to date. Our core operating model, as you kind of mentioned, was this advisory as a service model. I saw this really unique opportunity in the landscape for tech startups to build sort of like a McKinsey meets Bain meets Gartner for early stage companies who maybe weren't quite to the scale or budgets to work with those types of companies, and or those companies are kind of running towards enterprise the other direction from them. So our model is a subscription-based model where we sell tech-enabled services in R&D, go-to-market, and G&A. And each service is modularized and has different tiering structure and price points based on what your startup needs support on. And I think it's a pretty fragmented world out there of like going to advisors, consultants, independent agencies, dev shops, boutique firms. And we wanted to try to pull all that together into one cohesive offering and opportunity for startup founders and operators. We're kind of in the high single digits, millions today, with ambition to get into the 8 figures next year in top line. We've got about 125 customers globally. A unique part about our model is, given we're advisory and venture capital, we should sell the advisory services to any startup that needs help. So give us a ring. But we also offer them to our VC portfolio, which we have over 50 companies and have deployed over $60 million in the last 4.5 years into these companies. We don't force them to leverage the service, but I'm pretty certain it's a big value add and reason why we're able to get into these early stage pre-seed seed rounds. We have customers that range from the idea, where we're kind of co-founding it in our lab, all the way up to, I just found it the other day, our largest client is 200 million of ARR, which shocked me. It was bigger than I would have thought. But yeah, it's a really fun, exciting model, and we're having fun building it. To answer your question on go-to-market, it's a very ecosystem led growth model. We build a brand. If you, now that you get to know us a little bit, we'll infiltrate your social media feeds in your inbox, and you'll see us at events and doing podcast interviews all over the globe. And we drive a lot of partnerships with other private equity, growth equity, universities, accelerator programs. And we kind of become the operating partner to a lot of those firms with a bunch of resources to help execute on tactics to scale these companies efficiently. And so that's really the model. And it's been fun over the last few years building it. And we're getting to a different inflection point right on our stage. At the very beginning, Ryan, I was telling you, everyone would pat me on the head and say, Kyle, that'd be great if you could leverage your operational experience and your angel investing experience and turn that into a scalable company, kind of like good luck kid, if you could pull it off. And it feels like we're pulling it off. It's not easy, but we're kind of moving to this more growth stage style company, and not trying to follow any like venture funding playbook for our own operating company, right? We're trying to bootstrap that and scale that profitably and efficiently. And that comes with a whole other set of challenges and opportunities for us.
Well, I mean, I love it that you didn't take anybody's, you can't do that approach. It is very unique, the combo. And so I guess like you said, it comes with challenges. Like, what are the biggest challenges in growing the business? And I mean, love to hear, and we don't need to get super deep into the backdrop, but love to hear, from like day one, right? Create enough cash flow to allocate resources to now, like what you're running into, and would love to hear that.
Yeah, well, I mean, fortunately, a couple things. I'm noticing, by the way, I'm wearing my Oracle Dine shirt. But foundationally, I was fortunate to be a chief revenue officer of a company to 100 million that sold to Oracle for 600 million, and had a pretty good equity position in that. So it was able to sort of like establish a foundation that I was able to use some of those proceeds to fund York IE. So out of the gate, like it wasn't straight bootstrap. I self-funded and made sure I could build the initial team and founding team and infrastructure around me to build the tech, foundation, the AI foundation behind everything we're doing, as well as the kind of human in the loop of everything that we're doing. And so, that was kind of the very beginning. I'd say as you get bigger, when you bootstrap and when you self fund, when top line, goes up, so does expense line, right? And trying to find the balance of growth versus profitability in a company that is very service heavy, and the majority of our expenses are people, right? And making sure that everybody's focused on all the right things. And we've been trying to build this business with a lot of first class SaaS principles, right? Subscription business model principles,
Mm-hmm.
high margin principles, SaaS KPIs, SaaS metrics. And to do that, there's just a lot of trade offs, right? And a balancing act. Most companies that would get to our scale in this manner would go raise a big growth equity round to get it to the next stage of growth, and that's just not something that we want to do. And I don't think it even fits our model, given that we're also a venture capital firm with LPs in our fund, and a lot of upside in the long game related to the awesome portfolio we have, right? So the diverse business model makes it that we have to sort of do it our way and
Mm-hmm.
not follow traditional path. But that also comes with its own challenges of those trade offs.
Yeah. No, that makes sense, man. That's it's an interesting paradigm with that, with what you're doing. And I mean, you're doing great so far is what I would say, right? So keep rolling with it. And then like here's my question too. I mean, and you alluded to this, or you mentioned this, is like, hey, like a lot of our costs are in our people since we're services oriented. So like how have you approached integrating AI into your people? Because most companies, specifically on SaaS, look at integrating AI into their product.
Yeah, it's a great point. And I think we're like a weird, like we're weird in how I'm going to talk about this, because I think our product is this advisory as a service business, right? Which I am trying to tech, AI, template, data, research enable on one side. And then on the other side, I'm trying to not just human enable, but also onshore, offshore enable. So we have a global team of 200 people, of which 160 of them are in our operations center in India, which is a lower cost region in the world. The team over there is doing everything from full stack development to RevOps to FP&A services, and also instituting AI, automation, frameworks, first class tech primitives, certifications across HubSpot, Salesforce, NetSuite, AWS, Azure, right? Across
Mm-hmm.
the underlying infrastructure. So it's this balancing act of like delivering strategic value that people will pay for, while you're also creating efficiency through tech, you know, uh, AI, automation, proprietary IP, and we call it like I always joke like the artificial intelligence of like a mechanical Turk is like kind of like humans, right? And so it's an important factor in our kind of service delivery model. Lastly, I think it's really important. Like I think AI is this like I find it a little bit like overhyped, and I think we can like get a little more deeply into what I mean by that. But AI to me is only as good as the data that you
Yeah.
feed it, and humans' ability to leverage it for whether that's for efficiencies in their processes or their go to market or their operations of a business, or to your point earlier, in product roadmaps. And too often I'm seeing like AI as the be all end all and the replacement of things, and not like the enhancement or the feature or the IP moat or the differentiation of things, if that makes sense. So the amount of startups that we get pitched, for example, that are like AI for this or AI for that, I'd much rather you tell me that you're a shellfish traceability company creating an operating system for the seafood space that's leveraging AI for these following components in your product and in your workflows.
Hmm.
versus AI in an industry that doesn't need AI in it, if that makes sense.
Yeah, yeah,
And so this is, and we maybe that point of view is bred from the fact that we do a lot of like vertical industry software and work with a lot of services companies that are becoming subscription and SaaS based companies, and like that's our lens of the world. And not everything needs to be like the next AI chip or something that's going to cost $1 billion to fund and scale.
Oh yeah, yeah, that makes sense, man. Oh, and I guess let me clarify. So what I mean by that is because you do have a unique paradigm, right? You got the value with your offshoring, right? So there's cost benefits to that, and then you have the, I don't want to call it the Amazon model, but the reusability of what you find good that you could
Yeah.
deliver to your clients at an economical price point, where they basically take the highest selling goods and then they make their own version of it and then resell it.
Right. Yep.
But like what I'm talking about is more like, all right, tactically, like how maybe you haven't done it yet because there's a lot you're working on right now. So,
Yep.
like tactically deploying it for specific, let's just say departmental outcomes, right? Or attaching it to KPIs or OKRs. Have you done anything like that at all, or no?
Well, yeah, maybe I'm not articulating it perfectly. Like, if you think about it, all of our functional areas for our people and teams attached to the P&L are advisories of service offerings that we also offer to the market, right? And underlying all of that, we are leveraging ChatGPT and our own proprietary data with AI on top of
Okay,
it
gotcha,
to
gotcha.
provide value. So for example, let's give an example. You know, we basically created a platform called Fuel. Think of it like a Crunchbase, PitchBook, Preqin, Traxon, which is a operational version of a research platform. And so you can kind of go in there and you can say, write me an ebook, give me 10 topics for ebooks on uh, AI on in the cybersecurity space related to the automotive sector, and it'll go crawl the data sets that we have and look for companies and points of views and perspectives and spit you back those topics. And then you could say, take it another level. Okay, can you give me a template or actually write the whole ebook that I can then go edit and evolve into, right? So we have built a bunch of these tools for, whether it's pricing analysis or messaging hierarchies or press releases or content creation or product roadmap reviews or should we fund this company or not, right? And we were leveraging AI to, how do I say it? So short circuit what would have taken weeks historically into minutes, if not hours, which in turn makes us more efficient. So we eat our own dog food, right? We're leveraging these
Yeah.
our own tools to build our go to market, to build our back office, to build our products and roadmap, to run our investments in corporate development teams. But then also they have the benefit of then enabling and tech enabling the advisory service offerings that we're bringing to clients, and we are like our own best use case, if that makes sense.
Love that. Yeah, that's awesome, man. So, what would you say then, like of that? Because I love that. I love your approach. It makes so much sense, and I've seen some other really really big industry leaders using the same approach. How would you like? What would you say are your top three most valuable use cases for your advisory clients, or that you see that you're bringing to the market?
Yeah, I think what we've gotten really really good at is like uh, pragmatic growth across those three lanes, right? So from, it used to be a world of like on the kind of G&A side of like how do you financially engineer outcomes in startups, right? Like raise this round, to raise this round, to raise this round, to raise this round. I think where
Mm-hmm.
we go in is a maniacal approach on the kind of business model, the bottoms up build of your multi-year plan, the capital strategy required to support that, and that's like a really foundational element. I think when it comes to R&D, I think there's a lot of wasted spend by what we call the product out approach to company building. So a lot of companies are founded by technical engineers or technical people, and have always like built products based on what they can build and what features they think are important. Where what we're seeing, and I'm sure you've seen a lot, given your go-to-market background, is a more called market-in approach to company building, where you do a lot of research on your market, you understand your TAM, your SAM, the competitive profiles of the industry, and you build based on the gaps that exist in that industry or the antiquation of that industry or the legacy of that industry, and work that back through customer feedback, market feedback to then our roadmap, right? So that's where we see it in R&D. And then in go to market, it's about efficient scaling. I mean, I talk a lot about, the world just has changed so much as it relates to getting buyers' attention. And so we do a lot around brand building, brand creation, a lot around, SaaS metrics, KPIs, quota models, like, again, bottoms up, sort of like, average ARR per customer times number of customers you need to win per month. Like, that's how you hit your number. And, what we see a lot in these financial plans is the tops down, pie in the sky. Like, how do you get more enterprise to scale? We're like more like, how do you find your sweet spot? How do you define your ICP? How do you nail your pricing strategy? And how do you do it over and over and over again, right? So I think these are the types of things that we look at as like bringing just a more pragmatic, lean approach, that's like more organized, and then
Mm-hmm.
being able to not only help like drive that strategy, but then take some components of that from an execution to market.
Yeah, I know. I mean, I think you crushed it with what you're talking about. That makes a lot of sense. And I've seen all three of those areas. So,
Well, one thing, Ryan, too, like I want to be transparent. Like business building's hard. I mean, for your audience of go to market leaders and founders, like, you know, um, not everything I'm saying is created equal, right? Like some of our services are growing faster, have higher revenue or higher margin, or are more tech and AI enabled or more offshore enabled than others, right? Like everything's like on a roadmap and we have plans, and there's sequential, they have to happen sequentially. You can't do everything at once and boil the ocean. you know our big vision, again, if you want to be the McKinsey for startups, we're also going to have to do more things that we don't even do today that are on like the long-term product roadmap and service roadmap, right? So our job as CEOs is to make sure that we have a clear vision, assemble the right team, make sure there's capital in the bank to execute on that strategy, but also focus the team towards operational goals that then unlock the next phase of growth for our company to achieve our vision, which again is like sort of like a mirage that you'll never actually get to, right? If you actually are building something that's highly scalable and ambitious. So I just like to kind of like take a step back sometimes, and like, I realize, given my salesmanship and evangelist background, like it's not all perfect, right? We're figuring it out every day. But kind of we're well on our way and having fun doing it.
and I'll end on this, man, because we're just about up on time. But so how, in light of what you talked about, the big vision, your North Star, how do you focus a product roadmap in sequential order? Like and we don't, I would love to hear that. Like, how do you approach it? Because you're attacking a lot in a lot of different
Yeah,
areas.
well, I think we bit off more than we could chew early, right? We added like a talent advisory service, talent recruiting. We added a market research, like kind of Gartner Light service, like way too early, and tried to treat them the same as other services where we were putting dozens of resources towards and seeing incredible client adoption towards. So I think what we've done is we've really anchored around, we work with technology companies, and one of the things that all technology companies needs is help on building technology. And so, our core kind of entry services are R&D services, and we can help everything from UI, UX, all the way down to DevOps and full stack development in between, right? And then all the other services modules we offer as very complementary to your technology, even if you're building it all yourself in house, right? I've kind of been muzzled, I guess, and like, my hands are tied, feet are tied behind my back by my CFO and my co-founders to sort of like, let's focus on the optimizations and operationalizing all of this before we institute anything net new, right? But have roadmaps to better operationalize all the things we're already doing today,
Mm-hmm.
if that makes sense, right?
Yep.
But once that unlocks, right, and once we really hit a big exit or win a giant client or establish a huge partnership with a big PE firm, able to leverage those profits or those returns to then go invest in the next frontier, whether that's a go-to-market investment or whether that's a addition to our advisory as a service product roadmap.
Yeah.
So this is kind of like, I'd say we kind of tried a little too much in the beginning. Maybe, in hindsight, I can say that, maybe it was like throwing spaghetti at the wall to see what took off in the kind of community we were cultivating. All good lessons learned, I'd say, but we're definitely being a lot more purposeful about product managing that moving forward.
Well, Kyle, it was a pleasure, man. Love this conversation. Where can people find you? Where can they find out more about York Investments? And then we'll wrap things up.
Yeah, our website is york.ie. The IE stands for Investment Enterprise, and you can find us at social. We're at York Growth everywhere, and I'm KYork20 across the social platforms too.
Love that, man. Well, thanks for being on it, Kyle. We will see you back for part 2, which is coming up as well. So you're not going to want to miss that. So thanks for being on the show, man.
Thank you.